Hello, and welcome to the educational videos. I'm back from Maui, so back to wonderful Chicago. And what do I get in? I get in into the wonderful, looks like bear market. So let me talk about it. This is today's topic. So once again, welcome to the educational videos. Short disclaimer: I'm not a financial advisor, so whatever I'm saying, take it with a grain of salt. This is just some thoughts right now. So here are the thoughts. The tariffs are causing obviously a lot of havoc, and that causes a lot of turbulence in the market, and it is expected though. So you can't just brush it off and say, okay, let's put the tariffs on the whole world and nothing is going to happen to U.S. economy, or even just to the market in general. So it's not just U.S. economy market. It's basically all the markets were affected a lot by it. So just take a look at 2018, which was much milder version of what we're experiencing right now. And so the thoughts are running like, what's going to happen next? Okay, so here's what the 2018 looked like, and here's the index S&P 500, which is SPY, or if you take it the ETF, or SPX if you take it as an index. Basically, if you can see, this is what it looks like. This is the upper portion of the curve of what would happen if you invest the money into it and hold it, and the bottom portion shows you what the drawdowns are. And you can see this is the 2018 highlight over here. So the market went down in December of 2018 by 19%, but who's to say that I'm going to go down further this time? So as an example, that was the meltdown, the financial meltdown. It went down 56%. Okay, so let's just review quickly what we have. So if we zoom into the 2018 once again, it started off not as bad. I mean, only 10% drawdowns, bibbled, started to go up, made new highs, and then went down 19% from that new high, right? So from October all the way to December, so 3 months. Keep that in mind. Okay, now here's what it is right now. You can see the 2022 on the left hand side. That was the bottom, I think, of the market, of the bear market of 2022, which was a very problematic year in its own. And that was minus 25%. Okay. Then we bibbled. And then 2023, we finally transitioned out of it and started to make new highs. As you can see, this is when we made the new high from that 2022 bear market. So it took us the whole 2022 plus pretty much the whole 2023 before we made new highs in the market. So it's almost 2 years, right? It's pretty much 2 years, not on the dot, but very close to 2 years. And then we were making new highs with some bumps in the road, and then we have this bump. That was the first bump with a little rally, and then the sharp drop, which we experienced just this week. Actually, yeah, today is Saturday, so this week. Okay. I literally, the previous recording I made last week, I was still in Maui. Everything was like over here somewhere. So basically, we were pretty good, doing okay. Looked like that we were maybe going to recover. Nope, we didn't. Like as if nobody expected that the tariffs was going to be retaliated. So and it's not even done yet fully, right? The retaliation is not over yet. Who knows what the European Union is going to do, or other countries, what negotiations will happen with the other countries. Who knows what's going to happen? Fed's already said that we might not even lower the rates because the tariffs obviously will cause the inflation. So what is going to lead us? Well, let's see. I'm just, again, hypothetically speaking. It's not even projection. I'm just saying what can possibly happen. As an example, very good scenario. We go up a little bit, maybe a little bit down with some negotiations, and go up again, and then start doing this high highs, low lows, going up and up and up. And by the end of the year, we're going to make basically back to where we were and continue on our merry way up, right? So we have the scare, and that scare, it's not going to be as good as we had back in the COVID times, but because it looks like the Feds are not ready to step in, but who knows? So as a very good scenario, we might have like another month of doing something weird, and maybe 2 months, and then finally we'll find the bottom and we'll go up. Okay. Now, here's the not so good scenario where we go up a little bit and then down sharply, up a little bit and down sharply, up, down, and then finally resume. So this is more of a typical bear market scenario. So it's going to take about 2 years to get out from this again, like 2022 kind of scenario. I mean, we might have other bibbling in here where it will go up, it will go down again. So it's kind of like a typical bear market. Okay. Now, here's the worst case scenario where it's recession, where we'll continues to be depressed. If you look at this closely and if you calculate these numbers, we will be more than 30% down, probably going into the 40% territory easily, and it will last. As an example, can go like this, going up and down, up and down, up and down, and finally making new highs, and might take another basically 5 years before we'll actually see the new highs. So it may take a while before we'll get out of it. That's the kind of like a bad case scenario. Now, the hopeful scenario, maybe it's not going to be a sharp reversal. Maybe we'll have something building. Maybe in a year and from now we're going to make new highs. That's hopeful scenario. Well, I mean, obviously we'll want to have the first scenario where we'll just sharply reverse and go up. But who knows what's going to happen? It's like there's no indication right now that everything will be peachy. So now let me go into the next slide. So the conclusion that I'm trying to make, I mean, it's again, this is just my thoughts. So don't take me as if I'm like a god of investing, something like that. Just my thoughts. And so technically speaking, we are already in the bear market. The 17% that we already dropped in S&P 500, or more than 20% that we dropped already in Nasdaq 100, that's already speaking to the point that we are in the bear market, unless there's something drastically going on and the Fed step in, and then it will sharply reverse. Okay, doesn't sound like that they wanted to step in. There's a lot of political tensions going on between the Republicans and Democrats, and Fed's currently on the Democratic kind of side because Trump said that he wants to even maybe dismember Feds the way how they operate. So basically, there's all kinds of tension going on, and they're not ready to step in yet. So, can we sharply reverse? Sure. Can we get into a recession? Absolutely can. The tariff wars are not a joke. It's not something which will just blow over because they implement it, and the other countries will not go down easily. Okay, so everyone will not just bend to the USA will. That's for sure. So expect a lot of volatility going on. Can we protect ourselves? Oh, yes. Yes, we can. And I don't have something to show right now on the screen, but yes, you can protect. As an example, I'm more long biased personally in my personal suite. We're still going down this week. But as an example, on Friday it went down only 1.3%, while the market went down almost 6%. Actually, at the end of the day, it was more than 6%. S&P 500 went down. So just keep that in mind. So I mean, I had protection, it's just not as much, and my personal suite of systems is self-regulating. I'm already operating mostly in cash in my suite, and it just shorts fired, but not as much to completely prop me up. But some of our students, they do have positive days, even like Friday. So believe it or not, it's not something unheard of. Again, I don't want to put it in here because I didn't get the permission yet, but they claimed that they made a lot of money because they are protected since the March. And as you saw my video a couple of weeks ago where I said that trouble is brewing, here we go. The trouble was brewing, and as you can see, it kind of spilled over or exploded a little bit on that trouble front. So nothing new about it. And can you learn how to protect yourself? Yes, you do need to have rules, and that's what we do. And I'm trying not to advertise them as much, but that's what we literally do. We come up with rules, and that's what systematic trading is all about. So if you want to know more, if you have more questions, want to know more, write to the info@tradingsystems.com, or if you really want to know how it can help you personally, book the call. Book the call, go to tradingsystems.com and follow the link, apply, or go up top and say Elite Mentoring and apply for the Elite Mentoring. you will not regret what you will learn. I can show you more in a personalized manner what it is, how it works. And if you have any questions, I will answer any questions, and it will be much easier to talk through, and there's no obligation to join our program or and community. But anyway, so on this note, I wanted to wrap it up, and I hope we'll see that one of the scenarios will play out. I don't know which one is going to play out, but we'll see which one. So talk to you soon.